Welcome back. You're watching the Commodity Trade. We've got Vijay Bambwani, author and CEO of BSPLindia.com, who's joining us live in the studio, and Dharmesh Bhatia, Senior Manager Forex and Commodity Strategy at Emirates MNBD, joining us from Dubai as well. Vijay, let me come to you first, and let's start with crude oil. We've heard a lot as far as global news flow is concerned, but we've recouped a lot of the losses that we saw in the last week. On Brent, we are close to the $56 per barrel level. What's the near to medium term outlook going ahead from here? Because one of the, macro triggers that we've seen is that there could be a possible agreement between Russia and Saudi that could extend beyond March for the next year. But what does the medium term outlook look? Are we capped at 60 or do we remain range bound?
Pranay, thank you for having me on your show. About a month ago, I was on your channel and I talked about a few triggers why crude should be firm going into 2018. In addition to the factors that you mentioned, a possible treaty between Russia and Saudi Arabia, two of the largest exporting nations in the world, about supporting crude oil prices. There are two other big factors here. Let's not forget Saudi Aramco, the world's largest oil drilling and refining company, is heading into an IPO, and $100 billion IPO at that. The second aspect is America, which was so far a net importer of crude oil, is now turning into an exporter of crude oil. And earlier the Americans were clamoring for lower crude oil prices. Now I think come 2018 they're going to be clamoring for higher crude oil prices. So I think you're typically likely to see bullish support coming in on crude every time it declines. And we are possibly 6 to 7% below a glass ceiling level, which, if overcome successfully, should see crude oil prices heading higher. And going by the seasonal aspect, in the winter months, natural gas and crude oil prices, due to heating requirements, do tend to edge up. So all in all, we are looking at a period when crude oil prices are likely to get support on all declines. So crude would possibly head towards 56 plus levels in the near to medium term, maybe even higher.
All right, so that's the medium-term view on crude, and of course, the listing of Saudi Aramco is also one important trigger that Vijay mentioned, because that's also a vested interest for Saudi Arabia, which happens to be, of course, needless to say, the biggest producer in the OPEC cartel. Let's get in Dharmesh as well. Dharmesh, you have a sell call on crude. You have a stop loss around 33.60, target of 32.60. Could I ask you the time horizon on this, and what does the medium-term view seem to be? Do you believe that is there a real chance of us scaling 60 by the end of this fiscal, or do we remain capped beneath 60?
Talking about energy pack, especially crude oil, is really lackluster. If you have noticed, the price is trading between the range of around 45 to 55 broad range, but narrow range is almost 47 to 52. I'm talking about WTI. But if you have noticed, the spread between WTI and Brent has really increased, almost like $5.5. The gap, I'm expecting this gap to widen further. Short to medium term, I'm not so much bullish in the energy pack. I'm talking about especially the GCC area. I don't think so any development is going on in the market. The market is really slow. Regarding energy, see, if you have noticed, the changes has been coming up in especially the consumer sector. See, development is really high. If you have seen the equity market, the overall development across the world is really going high. But why not energy? The main reason is the supply constraint. The supply is really high. Whenever the market jumps to 53, 55, the share production increases and they start pumping in the market. But OPEC is on an average trying to reduce the price so that the price can sustain around 50 odd levels. Last almost 1.5 years, 2 years, the market is trading on an average of 50. But I don't think so market will continue these higher levels. If you have noticed, like China itself, the car manufacturing and the bike is almost 70-80% on electric. In GCC also, people are pushing into electric vehicles. Around the world, the change has been developing so fast that people itself is trading towards the clean and green energy pack. The BMD, the energy pack, the biggest Volvo companies, Jelly, all are converting themselves into energy, less consumption. So overall, long-term horizon, I don't think so. People will continue to buy energy pack. The long horizon, I am not very much bullish in the energy. Market will be lackluster. I'm expecting 45 to 44 levels mark where the market will sustain, and this will continue further. Saudi Arabia is trying to develop the country, the change on the economy from energy to other economy, tourism, everything is coming up across GCC. So short to medium term, maybe market will be in a range bound. But long term, I'm still bearish on the energy pack. Intraday perspective, I'm very bullish on the rupee. That's the reason why you can see a sell in the market. I'm expecting the price to touch 49 to 48 level mark, where the market will get stabilized. So sell on rise the strategy for energy for long term also.
All right. You also mentioned the rupee. Let me come to Vijay first. Vijay, I mean, in this week we've seen some strengthening come through on the dollar-rupee pair. Of course, it's come on back of some very sharp weakening that we've seen over the last 2-3 weeks. But still, I mean, if we compare ourselves to, post-demonetization levels, we are still quite strong. So what does the near-term view on the rupee seem to be? We've come back from 65.90 to almost 64.90 now. And in context of that, what do you feel about gold? Because gold again has recovered from September 8 lows of around 1262 odd on the COMEX to almost 1300. Do we rescale the 1300 level and on the rupee as well?
Well, Pranoy, where the rupee is concerned, the strength is definitely visible in the absolute near term, but I would give it maybe 1.5%, max 2% more to strengthen from here before the dollar starts to fight back against the INR. So I would give maybe 1.5%, 2% appreciation potential to the rupee, and should the rupee edge up higher from there, I might just take a relook at the entire metric itself. As far as gold is concerned, seasonal demand, this is, we are heading into Diwali plus Christmas up ahead in the near future. Seasonally, this is a good time to be buying gold on dips. And gold, definitely the more you see uncertainty in the economy across the world emerging. Of course, there are green shoots available, which is reflecting on base metal prices. But I do think that year on year, from now on for the next 3 to 5 years time frame, I think bullion should be attempting to recoup lost ground.
All right. You've got a buy call, Dharmesh, on gold with a target of around 30,000 odd. And also you've mentioned your call on the rupee. You have a sell call there. So if you can put this in conjunction. Also, you have a buy call on silver with a target of 40,750. So two questions. One is what the time horizon on this rally on gold is. As Vijay also said, there's festive season demand. There could be some buoyancy in the short term. Also, do you think that there's more scope for rise on silver in comparison to gold? In that, what the ratio could be?
Most of the contests I'm really agreeing with Vijay. I'm expecting the market to show some kind of firmness in coming days. But there is a spread. If you have noticed, the ratio between gold and silver is trading at higher level, almost 73-74, whereas silver has not rallied as compared to gold. But there are other things which is not pushing the silver price as an industrial demand. But on the other hand, there is a mixed view, whereas base metal has performed really high with 2 years high. Almost all the base metal is trading at 2 years high. So silver has not performed as equivalent to gold and base metal. But the upside is limited because market is not showing that firmness. It's trading between the range of 16 to 18, 18 and a half, and again you can see a sell side on the silver. But in the gold perspective, yes, I'm really bullish in the gold. Most of the weekends, if you have noticed, that there is a tug of war between Korea and the US, and all the time it's all the weekend time, and you can see the Monday morning, Tuesday, the market has shown up a gap up movement. So short momentum, I'm expecting the market to trade around $13.30, $13.34 internationally. And in domestic market, you can expect the market to trade around 30,000 to 30,350 level, where market can test again that level. Festive demand definitely will push the price, but fundamentally market will be in the range. And unless there is any big geopolitical tension arises, I don't think so that gold will rally further. Market will try to test 1330, 1340. The only concern which will come across is from the December side, where the interest rate change will appear in the market. And almost like my generation and maybe from 1960s, 1970s, we have seen the interest rate going down and down. But from last 1.5 years, we have seen the change in the interest rate. So our generation will definitely not know what will the consequences will come across. But yes, the change in interest rate will change in the bond price and the equity market, and then the commodity market will hit. So short to medium term, yes, market will react very fast when you can see a sudden spike. But long run, when the interest rate will actually change around and when the price will start going up, you can see a sell-off in the gold price also.
All right, so that's the view on precious metals. Now, let's get your views, gentlemen, on industrial metals. And Vijay, let me come to you first on this again. As far as, the entire pack is concerned, firstly, and correct me if I'm wrong, I think you're of the view that the dollar index will come back and bounce back over the medium term. So in context of that fact, what do you think about the base metals pack overall? And B, do you think that after this very strong run that we've seen across the board on copper, aluminium, nickel this week has outperformed 7 to 8% higher, is a time for correction coming near, or are we in a super cycle?
Pranoy, a month ago I came to your channel and I talked about a slight correction in some industrial metals, and we did see nickel, lead, etc. Come off a little bit. And right now, copper and zinc are both trading above the November 2016 highs. Now, December 2016, if you remember, was President Donald Trump's so-called reflational rally. Now, since copper, which is supposed to be the tin roof of the industrial metals market, or it's also known as Dr. Copper, or the pulse of the industrial economy, which is going great guns, which leads me to believe that bullishness in base metals is likely to persist. And you're possibly likely to see even the other metals like lead and aluminium, etc., which have not yet performed as well as copper, will now try to play catch up. So your industrial prices are likely to remain fairly firm in the near future.
So if you were to assign a pecking order, what would the top 2 or 3 picks be?
I would go with Dr. Copper because that is basically the leading barometer of industrial activity, followed closely by nickel. I think even that is likely to remain firm.
All right, so copper it seems to be, as well as nickel. Dharmesh, you too have a buy call on copper with a target of 453. And obviously a question added on to that is, should we breach this level? Do you see further upside after a mild consolidation?
Definitely market looks firm, especially the base metal Dr. Copper, as he said. I'm still bullish on the base metal side. If you have noticed, 2016 was a year for zinc and lead, where the rally of almost 70-75% rally can be seen. This year, there's 2 products which will outperform, that is copper and aluminium. Aluminium year to date is almost 45% high. Copper is almost 40-45%. I'm expecting this rally to continue further. Short medium term, I'm expecting market to breach the $7,000 LME price. Market has tested 6,900, again retraced. But this time, this time the rally is with a good volume and open interest. I'm expecting the market will breach $7,000 mark, and the market will try to test 7,200, 7,300. In domestic, you can see with rupee concern around 460 to 475 level for the copper. But aluminium, I'm really bullish. I'm expecting aluminium to test $2,500 in LME. In domestic market, you can expect around 156 to 160 level to short to medium term. Maybe the year-end market will be in a very positive note. So my suggestion is buying on dips for the base metal pack is really advisable.
Fair point, gentlemen. We're going to leave it at that, but thank you so much, Vijay, for joining us live in the studio, as well as Dharmesh for joining us from Dubai and giving us an exhaustive, deep drill down into what you feel about the energy complex, especially crude oil, and also giving us your top picks for industrial metals and what your view on gold and silver is as well. But that's all the time that we have on this edition of the Commodity Trade. Thank you so much for watching.